All right, well, there we go, guys. Hey, everybody. Chris Franks with Texas West Capital. Coming at you live here, just a little bit later than what we normally do. Had some issues with the Restream software that I use. Wasn't connecting for some reason, so I got a temporary fix on it. So we're moving now. Hopefully you guys can see and hear me all right. Coming at you live, just, almost about 11:20 a.m. Central Standard Time here. Just north of Houston, Texas. So hopefully you guys are doing well out there. Hopefully you aren't buying into all the doom and gloom. I think, again, I was one of the first guys out there really talking about the big kind of end to end of the rally that we've had for decades, right? And then I noticed, well, we didn't really get a blow off top, which is what we should have seen. So I've been really cautious about that. And it looks like that was the right way to be, because it looks like we've got a pretty good rally coming off the lows. People talk about manipulation, talk about it isn't real, but yet, the fact is you've got significant volume coming in across significant number of assets. So, that's what you would, consider an actual rally, right? It's not just some silly little thing. So, yeah, that's kind of what we're looking at here. Who all's here already? We've got Kimasabi, Fibbo, what's up, man? Salvador Avila's here. No, it wasn't rescheduled. Like I said, just the issue with the Restream there. Excuse me. Hey there, Mark, Jonas, Hank, Mr. Wilkes is here as well. Bamboo, Nevolution, Data, Brian Riley, JCC Solo, what's up, man? Oh, you can hear me loud and clear? Great. Ilya, how are you doing? Spiral Architects, C-Mac, good to see you. Baltazar, Pete, good, guys. Glad to see y'all checking in. By the way, guys, hey, as we've been saying here, you can join us for our mentor program here. The link is right there, howtotradetowin.com/LMT. And you'll have all the information on there, including multiple different ways to pay. We've even got financing on there, guys, if you want that. But, at the end of the day, you can go out there and you can try and do it on your own. Many people have done it on their own. Most people, have a lot of trouble doing that. And I tell you from experience, doing it on your own is going to take you a lot longer. It's going to cost you a lot more money, believe it or not, which you should. If you've been in the market for at least a year or two by now, you should understand that. But, again, the whole idea of a mentor or coach, guys, is to help you navigate all those issues that you're going to come across as you start out. So hopefully you don't do them, or you don't do them as bad as what most people will do them. So we'd love for you guys to be a part of it. Just released version 2 of my system. So our mentor programs have the original system, and they have this updated system, which really just, I think is just going to just blow them away continually. Already doing well with the original system. Update just makes it even easier to ride those trends out quite a bit. So anyway, you can do that there. Also, you can join us here. We're about done with this, guy. So if you haven't taken advantage of it, you might want to jump on it. howtotradetowin.com/T3. You can get a month of tier 3. No auto renew, nothing like that, for $19.99. Normally $200, guys. This is our way to get you in here and see, listen, we're not kidding. We do have a ridiculous amount of content, and it's good content. It's not the nonsense that you usually find online. It isn't the stuff you're going to find by somebody who's been trading for 2 years and they're like, oh my gosh, this is how you got to do it. No, we're talking about content that's by somebody who's been doing this for over a quarter of a century. All right. So, I had to have picked up things along the way is what I'm saying. So jump on there, man, just 1 month, even 1 month. But be sure when you come in, guys, you're ready to just get at it, because there is too much content in there for you to screw around. Get in, go through as much as possible, especially if you only plan on being there for 1 month. All right? Hopefully, you guys understand that. The Real Go-Go, what's up, man? Good to see you. Anyone see some shorts lying around? I misplaced my longs. That's good stuff. Fiboswani says, when Powell speaks, all he hears is the Peanuts teacher. Wah, 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 wah. Michael Johnson, what's up, man? Good to see you. I'm competing with Jerome Powell for eyes right now. Oh, okay. That's why Fibbo was saying that. Yeah, it is what it is. There was a time a few years back, for those of you that have been watching me for a while might remember, that every time I would log on, I was doing this like twice a day for 5 days a week. And every time in the morning, I'd log in at 10 a.m. Central Standard Time, and the market would drop. It was stupid. It went on for months. I was just like, are you kidding me? Every single time. So, yeah, good times, right? Mark Chenard, what's up, man? You got your 50% target today and sold 50% and moved stop loss up to break even after fees. Thank you for the help yesterday. Man, fantastic. I love that, man. Locking in profits, guys. Listen, nobody ever lost money locking in profits, okay? I know a lot of times you guys get out here and you're like, but, what if it goes up higher? But, right? Well, your buts don't mean nothing. It doesn't matter. All it matters is that you lock in profit, because what happens is if you continue to hold on, instead of taking profits at some point, the most likely outcome is that you're not going to lock in any profits at all, and you're going to take a loss even. Stop worrying about if it goes up further. Start concentrating on locking in profits consistently. And if you're scared because you think, oh my God, I just got lucky and I got in, then guess what? You need to join us. Seriously. If that's your concern, that's not a reason for you to be out there letting things ride forever. That's your acknowledgement that, hey, you don't know what you're doing and you need to learn. That's okay. That's not a bad thing, but you got to do it, guys. Remember, there's that framework, right? You have to recognize that you're doing something wrong. And then you have to decide that you're going to change it. Then you have to make a legit plan to actually change it. And guess what? The most difficult step for most people, after actually admitting that they're wrong, is doing it, is following through and doing that. So you guys got to do it. You got to do it. If you're not, I mean, there's nothing anybody can do to help you out then, guys. Does that make sense? All right. Quarter of a century sounds, it does, man. Every time I say that, I like stop for a minute and go, geez, oh whiz, it's been a while. But you know, Fiboswati's been doing it just about as long as I have. So he knows. Hey, Diego, good to see you checking in. So anyway, yeah, here's what we're looking at, guys. Long story short, right? I had talked about this time and time again when we were here, and everybody was like, oh no, we have to do this big, huge thing, which gets us down to 12,000. I said, no, this is this right here, right? And then we got this, and I said, this is this right here. And then I said we would get this, right? And look what we got. And here we are with the blue now, looking to push up a bit higher. You see how it peaks out right here above that purple kind of area? That's what we're kind of looking to do. Get you up there, 25, 26,000 in that area. And then we'll just look for a pullback. Guys, all that's going to be is 5 waves up off the low here. And here's the thing. If you want to be bearish, fine, be bearish. But be bearish at another 5 waves up. Because if you have 5 waves off the bottom, you're going to pull back in 3 waves, and you're going to ride 5 more waves up at least. Because that'll get you your A, B, C. Being bearish right here, like some of these accounts online here that you guys are following with hundreds of thousands of followers, biggest bull trap ever, and the other one that just keeps posting silly little double top and head and shoulders patterns and triangles that aren't triangles and all this silliness. And the problem, and I had somebody say to me, so what? Let them be. If they're wrong, they're wrong. Well, that's fine. But part of my job, what I see that I do out here is I help people, right? And I have to make it known that this is ridiculous, that what they're saying is ridiculous. Otherwise, I mean, what do they say about evil, right? It's not, the problem isn't the people that do evil in the world. The problem is the people that let it happen, right? The people that see it and don't say something, right? So granted, that's a much bigger philosophical, moral thing, ethical thing, right? But it's the same way with what we do here, right? I am a coach. I'm a mentor. This is what I do. So for me not to point it out when I see it is for me to allow it to be done and not go out there and try and help anybody. Now, if I say something and you choose not to listen, that's on you. That's on you. But I've done what I can do, right? Does that make sense, guys? Yes, you are old, Fibbo. You are old, buddy, just like me. Bamboo says you never stop learning. Exactly right. I am not done learning, guys. Not just in trading, but just in life. You always have to learn, guys. If you are not continually learning, then you are falling behind. If you stand still, you are falling behind. Why are you falling behind? Because everything continues to move on without you. So you don't have to just, do the opposite to fall behind, right? You just have to do nothing at all and just stay flat. And staying flat means the world moves on without you, and so you're falling behind. You guys understand that? You can sit here and you can whine and moan and complain about the devaluation of the dollar and all this other crap, which I used to do, right? But it's someday you got to go, man, well, you know what? All this complaining about isn't going to do anything. I need to actually do something about my stuff. I have to do something about me. I have to deal with it. Otherwise, the world continues to move without you and you're sitting there, right? It's like bears, right? Bears are afraid to long. They've been telling you all the way up here 15, 20, 30 different times. It's a bull trap, it's a bull trap, it's a bull trap, it's a bull trap. And they've missed 50+% of rally just in Bitcoin alone. Some of the alts, they've missed 200%, right? Or more. Because they're just staying flat. Or worse yet, this is going up. If you're short, think about it this way. If you are not short or long, right, from down here, and this is moving on without you. You are falling behind by sitting flat, right? If you are short, if you are doing the opposite, guess what happens? You're losing. You're really getting drilled, right? Because you're short. Your short was fine till you got down here. Now you're losing more and more of your short. Maybe you already got liquidated already. You see what I'm saying? So just like in life, guys, in trading, if you're not continuing to advance, continuing to learn, continuing to do better, continuing to move, if all you're doing is sitting there, you're falling behind. All right, guys? Yes, you are older, Hank. You're uber old. Some market participants need to be wrong for us to be right. No, they don't, actually. Listen, and go with me on this, okay? A lot of times people believe that trading is a zero-sum game. It's not, though. They think somebody has to lose in order for somebody to win. They don't have to, right? Here, look, if I've got a position, if I go long, right, and I've got a target based on my trading strategy, right, and we reach my target and I exit in profit, and you come in and you enter and your trading system says you got a higher target up here and it goes up, I didn't lose anything. I followed through. I did my plan. I made my money. I didn't lose, right? And you got in and you followed your plan and you made your money and you didn't lose, right? Sometimes somebody has to lose. Or not they even have to lose. Sometimes somebody does lose. But you don't have to. Think about that, guys. You don't actually have to be on, there doesn't have to be a loser. I mean, most people don't ever actually consider that. And then when they do, it's like this is just huge, like, oh my God, yeah. And that's what it should be. You should be like, oh my God, yeah. Yeah, because it's not a zero-sum game, guys. It doesn't have to be. Just because money's transferring or assets are transferring between, two or more parties doesn't mean that anybody necessarily has to lose. Somebody might be losing, but it doesn't mean that they have to in order for the other person to also win, right? Does that make sense? I hope that makes sense, guys. I hope that just changes your whole outlook right now. You go, oh my God, yes. So I mean, this is where we're at here, right? So this is where we're at. And again, looking for this final move up here into the pivot, right? This is what I've been talking since the beginning of the year, right? Is this idea that we'd rally up in 5 waves to the pivot, pull back, and then rally up, pull back to pivot, and then done up here, right? And then you got 5 waves up to the R1 pivot area, right? That's been my general thesis. Everything else, all the local stuff and whatever else, the 1 hour stuff, whatever, all out of the side. The idea has been that we're going to rate it in 5 waves to the pivot, pull back, and that'll give us a 1, 2, and then we'll get a 3 and a 4 back to the pivot and a 5 up to the R1 pivot area. And then we'll have one larger wave up to that area. Wave 2 is pull back to the pivot, right? Well, look at this, guys. Look at this. If we come out here and measure this, right? Look at 50% retracement from the R1 pivot to the pivot. That's a solid wave 2. So as long as we're rallying up into this kind of area around the pivot here, the idea is that's a 1, this is a 2. Guess what? Your pivots are going to get ran. I know that doesn't go. I know if you're really bearish, that's something you don't want to hear. I know, and you're going to argue with me, and you're going to fight, and you're going to be like, no. The problem is you've been fighting it the entire way. You have been fighting it the entire way. From the lows here up to, up these highs. Look at that. 60% almost. You've been fighting it. Stop fighting it. Stop listening to your higher time frame local yokels all over the internet, all over social media. And just, if you're trading, trade. Otherwise, this is going to be you entering up here at $40, $50, $60, $70,000. For most of you, you will be entering up here in $50,000 to $70,000. Most of you. I'm telling you. Why? Because it happens every single time. People don't get excited until you're getting through that all-time high. They'll try and front run it a little bit sometimes, but that's it. You don't have to do that, but you're going to choose to do that. And it's because you're fearful. Why are you fearful? Because you don't understand what's going on. You don't understand how the market works. And you listen to these other yahoos online that don't have any clue either. But they've got a big following. So you go, oh, they got a big following. They must know what they're talking about. They don't. Most of them don't. Some of them do. Some of them do. But most of them don't. If they are still bearish right now, and they've refused to go long at any point along this way, and worst case, they've held shorts all the way up here, stop following them. That makes no sense. That makes no sense. You have to take profits, guys. The fact that this has rallied from 15,000 and some change up here to 24,000, 25,000. The fact that we've done that, and if they were holding shorts from higher up and they haven't gotten out, is just stupid. I'm going to be honest with you guys. It's stupid. Why would you hold on to that much loss? If you really think it's going to go down further, go ahead and cut it. Lock in those stinking good profits, and then look for your next move down. But see, they don't understand, guys. This is what you're not understanding. They don't have conviction in what they're talking about. They're hoping it goes back down because they've been wrong this entire way up. So they then they grasp harder and tighter. And you've probably done that as well. You might even be doing it right now. But recognize what you're doing. You're grasping onto it, right? You're hoping it goes back down. But by this time, you've already lost a significant amount of your profits. Why? Think of this. If you shorted up here at 60,000, we'll say 60,000, right? And you got down to 50,000 or 15,000, right? What is that? It's $45,000, right? Now, if you let this rally back up 10,000, guess what? Now it's only 35,000. You, oh, but it's 35,000. No, you just lost 10,000. On 45,000, you just lost what? 20 somewhat percent? Why? There's no good reason for that. If you really think it's going to head down lower, then you should have gone ahead and locked it out. At least on the breakout of this resistance here, you should have just locked in your profit and then wait for the reversal. But see, these guys are out here and they're like, oh, well, it's got to go down. It's got to go down. They don't know when or where or how. They're just going to keep drawing double tops and head and shoulders and triangles at the top until it eventually comes back down. Then they're going to go, oh, see, I told you. And hopefully you're not silly enough to believe them. They're grasping. They're grasping, guys, okay? Now, just because you rallied up here doesn't mean that I can guarantee you that it's going to go up. And nobody can guarantee you price is going to do anything. If they do, it's a 50-50 chance. What the hell? Why would you listen to somebody that has a 1 in 2 chance of being right? That's as even if it gets. Why would you listen to that? But what I can tell you is the breadth and the movement and the volume and a number of whether it be risk assets like stocks or whether it be Bitcoin or other cryptos that have moved up significantly in this these last few months here is enough, should be enough in and of itself to say, listen, there's a good chance that bottom might be in. The fact that we've continued to break through longer term resistances and whatnot through here, again, is it. If you're looking at Wyckoff, again, this looks like accumulation in this area. So, I mean, these different ways you look at it, it looks like it could be. But again, here's the thing. If we break out higher once more, all of a sudden we're looking at like 5 waves up. And if this is 5 waves up, then we should expect to pull back 3 waves and then 5 waves more. But guess what? At that point, you break out above the weekly pivot. And if you're breaking out impulsively above that weekly pivot, again, you should go, oh my God, I think the bottom may actually be in. If you are not saying that when you break out impulsively above the weekly pivot, then you don't understand what you need to understand. Again, that's not that it's a bad thing, but it's a bad thing if you continue to not do anything about it. We all make mistakes, guys. We're only human. We're going to make mistakes. That's fine. That's part of learning. It's part of growing. It's part of being human. It's when you refuse to do anything about that. When you just, continue to make the same mistake over and over and over again, you don't try and fix it. That's the issue. That's what gets you caught. That's what keeps you falling further back in life and not reaching those goals that you want to reach. Again, whether it's trading or life, right? Claudio, Andrew Bennett, what's going on, guys? Let's see here. Let me see. I'm not bashing anybody, Hank. I'm speaking up about it. Again, no bashing. I'm trying to point out where the issue is. I'm trying to get people to recognize where the issue is. If you think that's bashing, then you need to go do something. I don't know, man. Again, that's not bashing. I haven't gone up and said these guys are idiots. They're so stupid. How could you be so dumb? What I'm saying is doesn't make any sense. What you're doing doesn't make any sense. You're ignoring this and this just so you can try to be better. And then I'm explaining right here. What I just did was I explained to you the thought process, the emotional movement going through it, the psychological thing they're going through. Because I guarantee you, everybody that's on here has at some point, if they're not currently doing it, at some point has gone through that. I'm describing the exact same thing so people can learn. Don't be so simple-minded when it comes to that, man. You know, it's not just a black and white, oh, I'm saying something against it, so I'm bashing somebody. I'm not. I'm saying this is what's going on. You need to recognize these. These are the steps. This is what's happening. You need to recognize these. That's what I'm doing. Let me see here. Powell's speech coming up in 7 more minutes. Yeah, it'll be the way it is, right? Big Vape, what's up, man? What's up with the R1 and R2 gap being so large? Because it's all based on price action. You can go Google RSI, how are pivots calculated? And that'll tell you it's based on the open, the high, and the low of the candles and the previous move on the whatever time frame it is on. And that's what gives it to you. They're just giving you those general areas of support and resistance, right? So these R's are resistance levels. Look where they're coming in. Does it make sense, right? Yeah, so it's based on that. Yeah. Does that make sense? Crypto Critical, what's up, man? Waiting for 5 waves up and 3 waves down for a confirmation. That's what I'm looking for as well. Yeah. So, I mean, yeah, so we'll see what happens here, right? Again, for me, on your bigger time frame, the thing that really kind of seals the deal is if you get that impulsive breakout above the weekly pivot. And if you get that, you should rally into the R1 pivot area. Most of the time, you'll get that and you'll get a pullback to the pivot. Again, they get you a 1 and a 2. And you'll head up with a 3 and a 4 and a 5. You know, up here toward the swing high or above, right? So that's what I'm looking at right now. That's at the end of the day, same thing I've been talking about for months. That's kind of your big kind of tell, right? But along the way, again, we've broken out of these resistances. We've had this what appears to be, again, accumulation, terminal shakeout here. The local accumulation that happens after terminal shakeout. The expected strong rally right back up to the top of the range here. And then, looking for the breakout, the pullback, and then the breakout again. So, yeah, that's what I'm kind of looking for as well here, right? Let me see here. So, yeah, so, I mean, again, this is what I do. By the way, for those of you that are asking, that have asked me this, again, I mentioned this prior. This comes off this 2011 swing low here. This is the inside pitchfork here. See, inside right here. And you can note here how well, again, you're looking at support's working well, resistance working well, EQ even working well, especially as we get out over here, right? I mean, it even worked well right here, obviously. So I think this is a pretty good pitchfork to be running with this right now. So we'll see if we can continue to get this movement up. And so, yeah, so again, looking for further up into 25, 26,000, getting you near the pivot here. And then, a pullback. I mean, we're getting sideways right here, at this area. So, I mean, the 22,170 may hold up. We might just get a short pullback and then a rally up higher, right? I mean, when things are really kind of bullish, that's often what you'll get, right? And so from, if we did rally up toward the pivot here and then pull back into this congestion we have here, as a 1-2, that gives us 5 waves up here, minimum at 43,476. Minimum. And so that would then give, it's right there above that R1 pivot, right? And so now the pivot is actually a 61.8 retracement. So you would look to pull back between the pivot and the 50% here. So 26,100 to 29,420 or so would be just the general kind of pullback on the larger time frame that you'd be looking for. But again, guys, for those that say this is not what should be happening, I mean, this is exactly what happened here, right? Look at this right here. You know, and so you have this pretty much a straight movement up, right? And you got this movement back, and you got another big movement up. I mean, and so does that mean we get this big, large pullback here? No, I don't think so. You know, this was driven by, you know, a one-off thing with the BitMEX engine, right? Liquidation engine. I mean, look, we retraced 90 somewhat percent. We don't normally retrace that, right? Normally it's, you know, 50%, 61.8, maybe 70.5, 78.6, you know, depending on what you're looking at there. It doesn't usually go back down to 90% like that. It can, but it doesn't have to. So when you see something coming out so significantly like that, because I've seen a lot of people, they go and they grab this and they go, oh yeah, well, it's going to get up here and then it's going to come way back down here. Well, yeah, it could, but I wouldn't necessarily, you know, assume that that's what has to happen, because that's such an odd pullback. It's so far. It doesn't regularly happen like that. Yes, it could happen, but no, it doesn't normally happen like that. So you can't just go and go, oh yeah, that's what I expect. Doesn't make a lot of sense, right? You can do that and go, okay, well, maybe it might, but you shouldn't expect. Remember, price action rhymes, it doesn't repeat. Does that make sense? So you'll get something similar, but you won't get the exact same thing. If you study Elliott wave, if you study Wyckoff, you can understand this in price action, right? Movement. Accumulation doesn't always look the same. It looks similar, but not the same, right? Distribution, you know, again, doesn't always look the same, but it can be similar. In this case, it's not even really similar here, right? This is distribution here, right? On the bigger time frame there. But, you know, these are things you want to do. So what I'm trying to get at here is, at the end of the day, I can't guarantee you that the bottom's in. I can't guarantee you that we're going to a new all-time high, but I can say with what we're seeing so far, the evidence appears to be much more likely that a bottom is in, and we're rallying up now to a likely new all-time high. Until something changes. But you guys, you've been following me for a while now, and you know, if something changes, I'll come in here and say, okay, yeah, that's not going to happen now. We're looking at something else, right? And that's the way you should be, guys. That you should be that open to change, you know, when you're trading, right? Ethereum looks like this, yeah, a bit, sure. We'll just do it right. We'll just do it like this, right? There we go. Yeah, see, similar, but not the same. Remember what happened with Ethereum here? Remember where Bitcoin made this lower low? Ethereum made a higher low. Again, this is accumulation. This is accumulation. It looks like it anyway, when you look at the volume and price action, as I pointed out before, right? You have this breakout right here. You have this breakout right here, right? Same thing. And yeah, so, you know, because Bitcoin and Ethereum are the top two, right? They generally move hand in hand for the most part, right? Again, that doesn't mean the exact same thing's going to happen. We had a bigger rally off here. We had a bigger dump off here. But overall, it looks like accumulation here and it looks like accumulation here. This one just gives you a terminal shakeout. This one gives you a last point of support. Doesn't actually break down below the low down here. It's all Wyckoff stuff, right? So yeah, but you know, again, you have the same kind of double top-ish kind of thing going on. You have the pullback and the rally, pullback and the rally, the move down, Yeah. Yeah. DXY is falling and Bitcoin is rising on Powell being rather dovish. Is he? Is he being dovish? I mean, it makes sense, right? I mean, he was speaking, again, guys, last week, Powell spoke, you know, after the interest rate decision, right? And he said the word disinflation like, what, 14, 15, 16 times? He hasn't said that since way before they started the significant, the 75 basis point rate hikes, right? So there is a definite change in tone. But remember, we talked about this in November. Remember, we started talking about it, and Jerome Powell was in there, and he sounded a little bit dovish, right? Compared to all that really hawkish speech that he had previously. We talked about that, right? And then we said, okay, so it looks like December is going to be a pullback to 50 basis points. And it was, right? And then he came and talked in December, no real change. It's just even more dovish, right? Not overly dovish, but still a lot more than what it had been, right? So yeah, 25 basis points coming into January, right? Or February. And then this one, now he's really speaking much more dovish than hawkish, right? With all that disinflation talk. Remember, inflation is just the aggregate kind of overall pricing kind of rising, right? Deflation is overall aggregate, and that doesn't mean everything. This is talking about overall, right? Coming down, right? Or being down significantly, right? But when you're still rising, but you're cooling off, you're rising a lot slower than what you were. That's called disinflation, and that usually signals that reversal, that turnaround coming in, right? It's kind of like what we talk about price action and volume with effort and result. Telling you, okay, a bottom is likely forming, or at least for a bounce, if not for a reversal, right? See how I did with disinflation. Wah, dovish, wah. But here's the thing, guys. Can I be honest with you? We talk about these things because you guys seem to want to talk about them, as far as economic stuff, right? And macro stuff, right? But let me be honest with you. The reason I spend most of my time teaching charts and how to understand charts is because more people can do that more easily, more consistently, more correctly. Macro, guys, you see it all the time. Big macro heads out there talking, right? People with distinguished education and distinguished job titles and distinguished employment, right? And getting it wrong consistently, right? There are too many moving parts, and we're still bound by our herding, right? Remember, I told you everybody herds, guys. But if you look at the charts are pretty clear a lot of times, right? It's just, can you read them? And it's a lot easier to teach somebody in a lot shorter time how to read a chart properly than it is to take years and years of experience with macroeconomics and throw it in there. There's just too many moving parts. So I know a lot of you come in here and you want to talk about the macro stuff, and that's great and all, but can I be honest with you? Do you guys mind if I'm honest with you? Don't worry about that in terms of charts. Because if you do, it's going to make you frozen. You're not going to be able to go long at points like this, or to go short at points like this, right? Because you're always got there's always something else that may happen, right? Well, what if Powell doesn't keep lowering the interest rate? What if interest rates go above 5%? What if PPI comes in a different way? Or what if PCE comes in another way? Or what if CPI comes in different? Or what if housing goes? Or what if jobs? Or what if not only jobs, what if jobs do this and then, if employment increases here and then wages go down here? Or what happens if jobs increase and wages increase? Or what happens if they both fall? There's too many moving parts, guys. Stop killing yourself with that. Don't worry about it. I promise you can be so happy not worrying about that nonsense. A lot of people are going to get on there and they're going to talk and they're going to give you a lot of charts. You're like, what the heck's this chart? Why would I want to watch this, right? Because macroeconomists are trying to figure out, based on all this fundamental stuff, on baby happy. So they got lots of different charts to look at to kind of sync up with their bias, right? You know what I do, guys? I look at the charts and I back into my macroeconomic understanding of what's likely to happen based on the charts. And if you've been following me for the last 5.5 years live here, 5 years on YouTube, you know I'm a big picture. I'm pretty often correct, right? Most of the time I'm correct. When it comes to interest rates, when it comes to, where things are headed, right? Because I look at the charts and I go with my understanding of the charts. And then so all these options all of a sudden aren't all these options anymore in the macroeconomic understanding side of it. And it narrows it down to what's more likely to happen than not. See, here's the thing. Everybody's talking about recession coming in, right? And I've been talking about potentially even a depression, right? Well, here's the thing. They're all saying it has to happen. But what if, this is my point, guys, what if we've got one more big push that melts faces, as everybody says, right? Melt up. A blow-off top, which would coincide much more with the idea of a super cycle top actually being complete, right? What if we've got that before, which is what we were looking for, before the big breakdown, right? So all of a sudden, if you're thinking it has to come now, well, you're fighting this all the way up. You're not going long all the way up. And then it finally breaks out, and then you're going to go long, maybe. Or you'll go, oh no, now it's definitely going to be just a little bit up higher here. Now it's going to come down. But you miss all that, right? Stop worrying so much about the macroeconomic side of it. There's a reason economics is called the dismal art. I promise you, your days will be much better. Your nights will be much sleepier, much more comfortably sleepy, if you don't worry about it so much. And you worry more about what's going on in the charts and learn to read the charts. It really does help, guys, honestly. Faces will melt. Scott Webb, what's up, man? Made it to the second live stream in a week? Wait, I've only done one live stream this week. What are you talking about? You like your content so much, you like my content so much that you try to arrange your break time at your restaurant around the Tuesday stream? I appreciate that, man. I know it's got to be tough, working the restaurant and everything. That's all, man. That's all. You guys may think I work a lot of hours. I'm sure Scott works a lot more than me with his restaurant there. Oh man, it's crazy time, right? Chris, what's up, man? He says, thoughts on it lining up pretty identical to Wall Street cheat sheet. Point of anger rally lining up to the weekly death cross. Then should go to depression on schematic we haven't had. When was accumulation? No, man, again, things rhyme. They don't repeat exactly, right? And everybody's trying to get it to set up exactly. Everybody's looking at this as the anger. What if this was the anger right here? Instead of this bigger move down, this was the move down into depression. But see, nobody's looking. Well, I've seen a couple people actually look at that. Most of the people, though, are looking at what you were just saying, I believe, which is this is the anger, and you still got depression coming. Now, again, anything can happen, right? But if you're still thinking that when this thing breaks out impulsively above the weekly pivot, then you're doing it wrong, right? At that point, you have to give in and go, okay, well, that bottom looks like it's there. The problem is you've already missed 15 and change to 27. You've already missed a huge move. And as a trader, you don't. Why do you want to miss those moves? You don't want to. So you're so worried about the fact that it could continue lower that you're focusing on the large time frame rather than the smaller time frames where you can trade and make money, right? And this is what been trying to say today. This is, that's what most people are doing. I'm not like knocking you about it. I'm just saying that's what most people are doing for that reason. Because they've been going down a year, right? But what if this is the normal time we have on the move down? It's like a year or so, right? We usually top out right toward the end of the year, right? So you got end of November up here. You got mid-December over here, right? And then you came down to December of the next year here, November of the next year here. I mean, in terms of generally what we expect, right? This is doing exactly what we generally expect. Time spans and everything, right? But, I get it. People, when you don't really understand what's going on, you get fearful, right? In your longer term trend, you've been going down a year and you're scared. I get it, because you don't want to make a mistake. Stop worrying about the weekly time frame. Why do you care about that? Are you trading or are you investing? If you're investing, well, maybe you're going to have to wait for a bit further to go up to get some good confirmation. If I'm investing on the yearly time frame, I need to see I would say, okay, well, I don't know. This is a pretty good breakout here. This was a good clue to go long. It's a huge candle coming out of there. There was a signal to go long. But, if you need something else, it's the weekly pivot. And if you get that impulsive breakout and close above it, you should be going long at that point as an investor, right? I mean, that's what you're looking for. But if you're a trader, guys, there's no reason you should be worried about what's going on the weekly time frame. Because it's just going to confuse you. It's going to keep you from doing anything. And as I said earlier, when you stand still, you're falling behind. If you are going long sometime at a point here, price is running without you. It's moving regardless of you sitting still. It's leaving you behind. So you're falling behind. You're not just standing still, you're falling behind. This is that thing about life, right? If you're not proactively doing things in your life to learn more, to create more, to do more, you're falling behind. A lot of people talk about, I just want to have money so I can just sit there and kind of be lazy and do all this stuff. But why? Often those are the same people that go to me and go, well, if you trade, why do you need to teach people to trade, right? Well, I enjoy teaching. I enjoy helping the people. I know it's going to be very few at the end of the day, but those who do, it's life-changing when you figure it out. And I love to know that I'm a part of that. I'm not altruistic. That makes me feel good, period. And that's okay that I'm not altruistic about it because you still gain something out of it, right? Two, why else would I do it? I've got goals. I've got very, very large goals. I'm not going to reach them wealth-wise just trading. I need multiple streams of income. Okay? 3, what if something happens to me and I can't trade anymore? What if I go blind? Which maybe I can still trade if somebody's figuring out some system to help me, right? But I don't know. But let's just say I go blind, right? And I can't trade. Well, what happens then? How do I have income? 4, what if I die? How is my family going to be taken care of if I die? I want them to have a continual stream of income that comes in for them. You guys see that? So this is what, when you look at that and you ask, if you're the type to ask that type of question, don't ask it anymore. Some people, sure, some people got that. They don't really know what they're talking about. They see they can make a lot more money teaching and they do that, right? Teaching whatever they think they know. Okay, fine, whatever. But for a lot of us out there in my position, there are other things associated with it. And I'm not going to get where I need to get. My family is not going to be protected the way I need them to be protected if something were to happen unless I'm creating multiple streams of income. So again, when it comes to your chart here, if you're trading, stop worrying about, oh my God, is the bottom in or not? Because you've already missed a huge bit of money you could have made. But you were paralyzed with fear because what if? Because your big account's out there saying that it's bearish. And it sounds like it might be true because you're in shell shock from this year of coming down here, right? But look at how similar these are, right? With what's going on here. Does that make sense, guys? Michael says, I mean, lots of people were pretty angry at FTX, so that lines up. Yeah, they were pretty angry. But it wasn't angry. We're not talking, if you're using that, if you're using that cheat sheet, right? You're not talking about angry at one thing. You're just talking about angry at the market, right? They were angry at FTX, right? They were angry at the market over here because we'd had the whole Three Arrows Capital, and then we had Celsius and Voyager et al. Coming in. I mean, they were angry overall at everything. Here, just kind of angry still at FTX. But again, as I've talked about, the big bit of volume coming in, the very little drop, I mean, that looks pretty close to a bottom there, right? Same kind of thing you see coming in down here at the lows, right? You had 3 capitulations, guys, over here in May, over here in June, and then over here in November. But yet everybody says we got to have capitulation. What do you mean we got to have? We just had 3. What do you mean we got to have? We've already had 3. See what I'm saying? Yeah. So, yeah. But again, also, guys, there's another thing to think about that. Yeah, so you go, okay, well, you like to help people, so why don't you do it for free? Well, again, I gave you my other reasons, right? But beyond that, do you work for free? Do you go, do all this with everybody else? Do whatever skill that you've had that's taken years to learn, you've already lost a lot of time and effort and maybe money learning it, right? Are you just going to go do it for free for everybody? No. Come on, guys. It's silly. It doesn't make sense, right? I mean, so these are things we have to work through, right? As we're trying to figure out what kind of people do we want to be? What do we want to see with our future? How do we want things to go in life? Right? This is all the stuff we have to kind of work through. So, what's going on, Silvio? Good to see you. Let's go ahead and jump ahead here, guys. Let me see. Where is, oh, man, the USD Yen chart, guys. Look at that. So that kind of hit my wave 2 target here. So I've got a 1-2 and then a 1-2 here. Hit my target coming down. We want to see some continuation down through the daily pivot here. But man, oh man, big move there. And by the way, seeing this on the USD Yen is the same kind of expectation you should have with the DXY. So we'll look at that in a minute. But you see how you have this, so you had this move up, right? You had this first rally up and you had this big push down with the volume, right? Large upper wick. Remember what I told you. Is there any follow through? No, there's no follow through. It rallies up, pulls back, makes a higher low, and then breaks out higher. So all this did was clear the way to get to this point. But look what you got. You got this gap up into this doji and then into this big, huge bearish engulfing candle right here. So we're coming down here right now at the pivot. So it's a pause, potential reversal. That's a pretty big pullback though. So what are we looking for? Well, we're looking for a breakdown below this wave X here at 127.564. And if we can get that, then we can look for wave 3 coming on down there about 119 as we continue to do it. So remember, we were looking at a 150 handle up here for the reversal. We got up there 151.944. And we got that. That's about that same time, again, that the Great British Pound had the collapse there and the flash crash, the move back up where the pensions almost were done for, right? And at that same time, we also had the DXY hitting that 114, 115 target that we'd had from back in January of 2021 when it first reversed, right? So everything happening at the same time there. So you should expect, the cable to continue to rally, the yen to continue to decline, and the DXY to continue to decline at that same area, right? Big Vape says the sentiment in November makes him pretty convinced the bottom is in. That was capitulation. Everyone and their mother was screaming for 10K. Incredible accounts were spreading FUD about Binance going under. Acceptable. All the boxes check out for the bottom. Yeah. Again, guys, when you're at the bottom, how do you know when you're at a bottom? Well, generally, you expect to hear a lot of bad news, and price doesn't do anything. Price doesn't react. You had the reaction off FTX, and then you had Genesis, and then you had Binance, and then you had all this FUD, right? All this, we say FUD, but all this information about all these guys going under, right? But what did price do? It didn't do anything. It just stayed and went up, right? That's usually an indication of a bottom. Same way when you're at the top and you have all this great news, good news coming in, and price doesn't keep going up. So use that, keep that as a feather in your cap there, guys, for when we're getting to these areas, for things for you to check off, to go, okay, it looks like the bottom may be in, it looks like the top may be in. Look for how news is playing out, okay? Also worth noting, today we had a golden cross on Bitcoin. Is that on the daily? Because my daily isn't closed for another 6 hours or so, I guess. So, yeah. Qs, guys. Qs are no different from we've been looking at the Dow, the NASDAQ, the S&P. Same idea here. Mid-August swing high, right? Trying to get above that. But look at this. We're trying to break out above the weekly pivot here. If you get an impulsive breakout above that weekly pivot, that should tell you, okay, bottom's likely in, we're heading up, right? You've got almost a double type bottom here. Again, you can look at this, the same kind of dragon pattern, right? So you get the head, you have the neck here, right, which goes to the first leg, goes up to the hump, goes to the second leg, right? You've got the breakout through this right here, right? Should have been your cue to go long, and you do, right? So, I mean, again, dragon pattern potentially playing out here across a lot of markets, right? It's just basically a W pattern, a version of a double bottom, with just some fancy little drawings, all the heads here and the necks here and whatever else. But that's looking good right now. If I look at that, right? So if this is, 1, 2, 3, 4, 5 here, right? I mean, look at this. Wave 3 is up here at about 326.68 initial target, secondary target at 342.34, right? And then you're looking for wave 4 on the pullback, right? So basically, you're looking for this move up, move back to the pivot, and then break out higher, right? So if we can get an overextension of wave 3 here into this supply, right? Look at where that target's coming up, that secondary target. Oops. Look at that. Oh, a little bit further down. I mean, it's almost exactly right there at the EQ, right? So I could see us potentially running, 1, 2, a 3 up there to 342. Watch what that does. 38.2, wave 4 pulls back to the pivot. Wave 5, 1618, up here 361, 362 at the R1 pivot. And that gives you 1, 2, 3, 4, 5 waves, right? And then you go from that and you pull back the entire length, right? Because that's 5 waves there. I don't know if you can see this here. Yeah, we'll just do it like this. Right here, right? Look at where 50% is, at the pivot. So again, you guys are running 1, 2, 3, 4, 5. And again, you expect wave 2. The initial target of wave 2 is usually that wave 4 support area, which again is the 50%, which again is the pivot. Multiple reasons of confluence here, right? Guys, I'm going to tell you right now, what I'm teaching you right now is something I've gone over multiple times before. If you aren't taking notes right now, what are you doing trading? This is one of the greatest things you can learn as a trader. What I'm showing you right here, it has to do with pivots and Elliott wave. This is one of the greatest things to work out consistently. It comes off bottoms, right? This is what happens. And so, yeah. So, I mean, you know, again, you get that movement there. And so then you got 1, you got 2 down here, right? And then all of a sudden you start looking out here, 3, 4. And you're looking at here at least up here around 526 on that, right? At least 526. Right? Kind of get all this out of here. Wave 5, right? That could be the final wave 5 right there. Now, we don't know for sure. If this is going to be the final wave 5, I want to see some like vertical movement here. I want to see some real bigger candles, vertical movement. Give us kind of like a blow off top, which again is likely then to extend further than that. With the weekly pivots here, I would think it'd probably get up here around R5, up at about 615 at least. So we'd probably see an overextension of wave 3, and then maybe even an overextension of wave 5 to finish it off, right? At least up here around 615, potentially even higher. So if we're going to get a blow off top, that's kind of what I would expect, right? And it's pretty much the same thing with your various stock indexes, the Dow, NASDAQ, the S&P, and whatnot. So following the same way as the Qs here, right? Did I see the update on Voyager this morning? Is that the 80 cents, 81 to 83 cents, and up to $1 potentially? They're going to allow rollover assets to Binance US, but oh, I didn't see that. Okay. But at the July 6, 22 prices? Well, that's interesting. I know Binance itself is having trouble with a specific kind of USD, I think, on-ramping onto the Binance exchange itself. So that's, you know, but of course that's unaffected. That should be unaffected by Binance US. Because that's a wholly, you know, different subsidiary, right? I didn't see that, though. I'm going to have to check that out, man. So I appreciate that. Thank you. Yeah, let me see that. July was basically the lows. Yeah. Makes sense, right? But again, you know, all this stuff, and people go, oh, well, if this is going to happen, what about, remember all this time talking about Mt. Gox over the last few years? Oh, they're going to get their money. They're going to dump it on the market. Oh, they're going to get their money. Going to do this, right? And what happened? They still ain't got their money, right? So again, I think, I don't know. I think when you look at that, I mean, maybe like that, maybe we can see maybe this type of melt up kind of, you know, blow off top time thing, maybe. And people, you know, get out then. I don't know, maybe. But it's not enough for me to worry about it right now. I know that it looks like we're probably headed up higher. And so I just want to keep watching this is going up. There's no use worrying about 6 months from now, right? I'm trading what's happening now. Again, that's that whole idea of getting off the large time frame and getting back to, if you're a trader, you know, the smaller time frames, the daily, the smaller, right? Not worrying so much about it. Because the big one, there's always some bigger trend, right? I mean, heck, we can look at weekly here and see how this down. But guess what, guys? That's all part of an even larger uptrend, right? I mean, you know, where do you stop? And I think, you know, you don't worry about it. You just kind of do you zoom into your, you know, your daily and shorter time frames, and you trade there. You don't worry about the larger thing. You'll get notification on those if you do. Again, and now if you're investing, it's a different thing. But if you're telling me you're a trader and you're worried about that larger time frame, then I'm going to tell you you're an investor. I'm not going to tell you. I'm not going to accept your trader nonsense. Not that anybody here is telling me nonsense. I'm just saying, if you come to me anywhere and you say, oh yeah, I'm a trader. What do you think of this weekly time frame thing? What do you think of this thing 6 months out? What do you think of this macroeconomic event? I'm going to say, well, what are you talking about? You said you were a trader. Why does that worry you? It shouldn't. You're a trader. Traders are shorter time frames. They're not weeks and months or whatever. And you can do swing trading for a little bit longer, but really you're kind of just getting into shorter term investing at that point, right? When people say trading, they mean trader, or at least in their head they mean that. But they still look at that longer time frame macroeconomic stuff and whatever and try to make sense of that before they trade. Well, again, then you miss all that movement from the bottom, right? If you were looking at the cues here, right, and you didn't get this, and then you saw this happen with this nice little doji here, and then another little doji here, and you're not going long, you're not doing it right. This is screaming, buy me. Look at this. This is down here. Look at how low that volume is with that doji down there. Making a higher low on lesser volume. There's less selling going on at the bottom than what there was here. And you're making a higher low. There's no reason you shouldn't be going long. But again, that has to do with understanding, right? With these things that people don't often want to pay for. They don't want to have, they want to pay for somebody to say, listen, this is exactly what you should be looking for. This is why, and explain this. They get offended if you charge for it, right? Well, who is that issue really on? That's on you, right? That's not on me or somebody else out there charging, right? That's on you because you don't recognize the value of your time. You don't recognize the value of your time. I've told you guys what I'm spending on myself, on 3 different mentors this year, right? 65, almost 70 grand, right? Over a year. That's what I've spent, right? Over this next year, already paid, right? Why? Well, Chris, if you're so skeptical, I do. Because I don't know everything. Because there are different parts of my business that I want to get better at. And I don't want to fumble around. I don't want to screw around. I don't want to waste time. So for me, it makes sense to pay money to somebody that can decrease the amount of time it takes me to figure out, because then I can increase my income in a quicker time frame, right? When I started learning to trade, that's what I started doing. Finally, after trying to do it like everybody else and just trying to, I don't want to spend any money to teach, anybody teach me. And finally I sat down and said, here's money, let's go. And the change in what I was able to learn and accomplish when I did that compared to previously on my own was just significantly different. I got so much further ahead in such a short amount of time, which meant I was able to make more money sooner. And again, whether it's trading or anything else you want to learn in life, guys, if you have a job and you have a specific skill set for that job and you want to learn to do it better because you want to make more money at your job, God, that's what you do. You're going to pay somebody that knows how to do that job better so that you can learn to do it better faster. And guess what? You can get paid more sooner. If you've got a business and you're doing, again, you want to learn these things. Why are you going to waste years and years and years with paying, and not just the time, but the money you're going to lose along the way, right? Trying all these different things, no matter what you're doing in business, right? I'm not even talking about just trading, but just in business in general, right? In life, things that you want to do. Why are you going to waste all that time and money when you could pay someone? You're going to lose money anyway trying to figure it out. Why not pay that money to get it figured out in a much, much, much quicker bit of time so you can start making money sooner, because then that money starts compounding. When it comes to trading, remember what I tell you about when it comes to trading? Consistently locking in profits, let time and compounding do the business of what you needed to do. If you can consistently lock in profits, then time and compounding are going to get you where you want to get in terms of wealth creation when you're a trader. Yeah. Just some thoughts, guys. I mean, again, I tell you, I don't tell you anything here that I don't do myself. I don't tell you anything here that isn't applicable to the rest of your life. It's all one big thing, guys. Coming back to the beginning of this episode, when I talked about, about, are you standing still or falling behind? Are you constantly trying to do more and learn more and get better? So it all comes back to you, guys. If you're just standing still, life, price action, whatever, is going to move without you. And so by standing still, by default, you are falling behind. It's just the way the world is, guys. You can't sit on the sidelines kind of picking daisies and staring up at the sky, wondering and whatever, and expect that you're going to get anywhere in life. It's not going to happen. That's life. Life's meant to live. Life's meant to learn. Do it. Maybe I'm just full of BS, right? Maybe I'm smoking my own stuff, and that's not really what it's all about. But I'll tell you this. Believing that's what it's all about and doing those things, do it, has made my life infinitely better. I can tell you that much. It has made my life infinitely better. So I don't know if that helps you. I don't know if that you know, kind of helps you with your life and figuring out things and whatnot. But, you know, from my personal experience sharing with you, this is viewing the world in this way has really just accelerated my growth and my, you know, my wealth and everything else that's, you know, altogether just made me, you know, a much happier person. Just in general, right? Bamboo says, I can just recommend it to everyone. If you want to be profitable, join the LMT program. The best you can do for consistently profitable trading. I appreciate that, man. Yeah. Bamboo's in there. Yeah, for sure. For sure. Andrew says, so I'm learning to trade, but I'm also a Bitcoin holder and looking for good DCA areas. Yeah. So, I mean, you know, again, if you're looking for that, you know, you don't just DCA just because, right? You need significant areas. And so one of those coming up is going to be, do you get a impulsive breakout above the weekly pivot, right? That would be a, you know, a good time to probably, if it breaks out there and stays above it, a good opportunity to enter on something like that, right? Or, you know, maybe you wait for it to rally up to the S1 and then pull back to the pivot and then you enter on the pullback, right? Yeah, yeah. Deadly, what's up, man? Always good to see you. So yeah, you know, again, the Qs and everything, same idea there. DXY. Again, kind of looking at same idea as what I was talking about on the what's it called? Oh my gosh. The yen, right? Kind of. Because on this one, I've actually got a 1-2 here, and then I've got a 1-2, 1-2, right? Now, depending on what we're doing here, this could become a 1-2 and then a 1-2. But I don't see anything going on here that says we should be breaking out above 115 and heading up, right? If we do, by the way we've broken, you know, if this ends up being that, then we should expect at least a movement up to 122, 133, at least, if we were. But again, absolutely nothing happening in here right now that suggests that's what we should be looking at. For right now, as long as we remain below this swing high up here at 105.631, then, you know, again, we should continue to look lower on that. Let me see here. I'm kind of tossing around here. I've got this as a 3-4 here, but I think it's possible we could have a 3-4 here. And then this becomes 5 over here, 5 of 1 over here, in which case we have an ABC up, right? An ABC down and then 5 up. So this, you know, potentially 1, 2, 3, 4, 5 is done here. But we need to see this kind of coming back down. Right now, we're right here at this daily pivot. We're trying to find support on. If we can drop through that impulsively, that's going to hint that wave 2 is complete here. And then we're going to want to see an impulsive breakout below the hourly pivot right around 102.284. If we can get that, that's the first real big clue that goes, okay, wave 2 is probably complete. And then we want to see this running down through the, you know, this 101.548 area and the swing low to continue heading lower there. I mean, but right now I'm still looking. There's no reason for me, again, weekly pivot. Remember we talked about this huge rejection we got here, right? And here we're coming up to this. The expectation is we should get rejected here and head on down at least to the S1. And so generally speaking, when I look at this, the idea is we get a 1 down here and then a rally up for a 2, get rejected the pivot, and then head down for a 3. So whatever the count kind of comes into, morphs into as we get down to here, right now that's my expectation. 5 waves down into the S1 pivot area, or maybe even a little bit lower, and then a rally back up into, you know, like this 102 to 104 kind of area as a wave 2, and then continuing lower. So, I mean, you know, again, and if that's happened, if this is what's going on, then, you know, in the big tape, if you guys are looking at your weekly and worried and scared about your weekly, well, at that point, you know, if that's what's playing out, then downward pressure ultimately on risk assets is off, and they should continue to rally, right? I think Bob Lucas, if you guys follow him, he's a great guy, man. And he really does a lot of great work with cycles. And so, I think he's talking about a 3-year bear cycle for the dollar. And again, that makes sense. That's what, kind of the idea we've been talking about, right? So, if you're not following him, follow him for sure. Is DXY just a knee-jerk from jobs? I don't even think it's a knee-jerk from job. I mean, yeah, it comes up about that time, but you expected a rally up there, right? You're expecting kind of, again, when you're looking at this, right, you're kind of looking at the count, trying to figure out what exactly this count may be. And, you were getting over, I mean, look at this. You were getting, it still hasn't broke down into oversold yet. Usually when you have a wave, like a legitimate wave one, like on a daily or something, you're expecting to see, if you're coming down, you're expecting to see RSI break down into oversold before you get, by the time you get wave one complete. And that's what I've been talking about as we've been going along here. It hasn't quite hit down there yet. So for me, with the way RSI generally tends to work in that wave one scenario with price action, I would expect movement down into that oversold area. So again, continuing to look lower, right? Now, there is this breakout above the pivot. So you want to watch this. Again, if we can get a rejection here and a break back down, okay, pivot's done its job. A little bit above it, it gets stopped. We're just getting stopped in this sideways action here, right? And you expect to go down, and that's great, right? But if it does continue up, now we get questionable. Now we got the weekly pivot right here, right there. You got the daily R1. Then things go a little bit questionable. Okay, so is this a bigger? Is this maybe wave one, or again wave 1, 2, 1, 2, which then gets this rally up here toward 106.878 kind of area, and then back down. That could still happen if we continue up. But right now I'm looking for a rejection in this area or around that weekly daily R1 pivot kind of area there. The weekly pivot is a 70.5 on my count here. 70.5 retracement. 78.6 retracement is the R1 on the daily. So yeah, well, we'll see what goes on here. But ultimately, there's nothing going on here. Even with this move and the breakout above the daily pivot here, I mean, we're still, again, below the weekly. And there's just nothing going on here that suggests, oh, God, we're going up to some new all-time high yet. It could happen. But it's just like the bears on Bitcoin, all the way from 15.5 all the way up to 24.5 or whatever, saying, oh, it's going to go down, it's going to go down, it's going to go down. Well, yeah, it may. But if you're doing that the entire way up, what the heck are you doing, right? So you have your areas that you watch, and you don't worry about it in between, right? Yeah. Well, it depends on where your daily channel starts, okay? If you start something like this on your channel, something like that, sure, it broke out. What I do, though, is I look at that overall structure, and it looks like you have this, and then you have this. So I would draw my channel like this. Pretty much get in there, kind of like this right here. Do you guys understand why I did that? I would kind of do it more like this, or maybe even, like that there. So you get the top, the bottom, the top, a little bit dip down, back up here. But because you have this one, see I have this channel drawn here? This is one section here, right? And then this is another section. Is another different channel, a different move, right? So yeah, I don't think this right here is maybe the correct way to do it. I think this is a better way of doing it. And it's just the breaking up of price action, how it moves, right? How it groups. And again, that's why I have this as a 1, 2, and then this starting another count coming down here. So we'll see, right? I mean, you can draw, like I said, you can draw a channel, but see, here's the thing, again, you can't draw it from the very top up here, right? And so I get kind of iffy, iffy on that type of thing. I want to draw it from the resistance, from the uppermost resistance to support, right? So if I was to draw it here, I actually would have to draw it like this here. right? So you're getting at the top. Look at that EQ. The EQ actually works pretty good here. Look at this. If we keep pulling this back, look how this works actually. See this EQ right here? Look how it works as resistance right here. And then resistance right here, right? I mean, so that's pretty good. So this is how I would draw it off this top up here. You know, when it's going sideways here, so you're going up and you have, you know, 1, 2, 3 different, and it's the third one that you have to draw from. At that, it's like it's something different, right? You can look at that and go, okay, there's a breakout from that, but I don't think it's the right way necessarily to look at it. I mean, we'll draw it on there and just kind of get some ideas, right? I mean, the channel actually works okay, right? Support and resistance coming down here. But, you know, is this just a simple little interior channel of a more important, larger channel, right? And that's what I would look for on that, potentially. Potentially. Does that make sense? Yeah. So, I mean, yeah, it's not that it's wrong to draw a channel there, right? I just think that, again, when we're looking at it, I think it's just kind of, you know, that the other one plays out more because it's sectioned coming in, right? So, I mean, you can draw that one and be fine and keep it, but I think you have to pay attention to the sections as well. And I think this is where a lot of people end up getting caught because they'll pay attention to the one and they'll go, oh, look, it's great and whatever. And then you get caught by the second one. They don't understand why they got caught by the second channel. They don't even understand there was a second, you know, an interior channel, sectioned channel there. Yeah. So that's what I'll be looking at. Looks like the market's responding to Jay Powell a little bit here, right? But anyway, yeah. So, I mean, you know, again, here's Tesla. Tesla's done this great rally up. I think it's probably getting pretty close if it's not already there with 5 waves up. You can see on the daily, we gapped up through what would be the daily here, right? Rallied on back up to the R1. Again, if this is the top in this area right here, 50% retracement at the daily pivot. So by default, everything else aside, I'd be looking for a rejection here with a target of this pivot area right around this gap here. And I'd be looking for a reversal in that area. And if we get a reversal in that area, well, now I'm looking at this. 1, let's say it's there at the pivot, 2, and now I'm looking up here, 310 for 3 or 347.79 area kind of for 5 at least. You know, that's without looking at any kind of overextensions. But yeah, this has been a great rally here for Tesla. Doing this, and it was down here. Remember, we were getting down to this area. I was telling you, don't sleep on it, right? That was the same one I was saying about everything else, right? About Sol, about you know, all these other ones, right? It just that everybody was looking like, oh, it's going to go down, it's going to go down, right? Just looking for that rejection and that move down. You don't have to, you know, you don't have to short it. You can just look to buy on a you know, if we get a rejection in this area, you can look to buy down here. In this gap area. Look to buy for the next move up. Heading up there above the all-time high, right? So yeah. Definitely something to pay attention to here. But this, you know, everybody was doom and gloom about it, right? About you know, Tesla. So everybody's doom and gloom about Sol, right? Again, everybody doing macro. Oh, look, FTX, all this with Sol. Oh, look, there's no real action happening on Sol. Look at all this, blah, 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 right? All you had to do was look at the charts. It was significantly oversold, printed a doji, heavy volume. I mean, my God. It's screaming at you, buy me. And had you bought it down there at 9 and some change, you'd have it up here at 23.25. People didn't. Again, they're too worried about the macro narrative, the other narrative, the thing with all the moving parts that they don't know for sure what's going on, that they can't control. So look what's happening in the charts. Right? So, right here, getting some good moves off. I'm looking locally here on Bitcoin as potentially a triangle here. So we've got this A, B, C, looking for D up and then E down and then rally up there. And looking for a target up there around 25, 325 at least. Kind of looking in that way. If we break down below this right here at 22,637.51. Then that'll likely take us below wave A. It'll invalidate the triangle, and we'll have an initial target at that hourly S1 right around 22,200. I mean, if I look at this right now, it looks like 1, 2, 3, 4, 5. So maybe a leading diagonal is an A, pull back for a B, and then a C up toward that R1 pivot on the daily or on the hourly. Do wave D, back. Now, if we continue from here and we rally up without pulling back, we just rally up above wave B, then the triangle is not valid. And in that case, we look at maybe like a 1, 2. I don't know, maybe this is a 1, 2, 3, 4, 5. That's really terrible look, but you know, we'd look at this as a 1, 2, and then 3 heading up 4, 5. And again, you'd be looking even higher on something like that. I mean, if this was to be a 1, 2 here, that actually gives you a wave 5 up here at around 26,195 on that. And that would be then this wave 3 up there. So it just depends on, you know, on how this plays out here. This was a big rejection right here at the hourly pivot. Big bearish engulfing rejection. We've got a lot of room we could fall here. So we could see this breakdown toward the S1 pivot at least. If we're to head up. The only other thing here, guys, is maybe wave circle 3 is done up here. Right? So maybe this is 3 and 4 and then a 5 here to give us 3. And in that case, if that's done, wave 4 has this target down here again, right here around the daily pivot, right? And that would give you 38.2 right there around 21,241. And then that gets you this target again up here right beyond the daily pivot. The daily R1 pivot. And so again, that's still that kind of, you know, the question is, are we done with wave 3 up here, with wave circle 3, or do we have a little bit further to finish it and then come down? But again, ultimately on the daily, remember the daily. Remember what we're looking for. 5 waves up to the R1 pivot area, 3 waves back to the pivot, and then back up, right? That gives you a 50% just below the daily pivot. So again, I kind of expect maybe a little bit of a further push up to finish wave 5 a bit further above it, right? It could head up, you know, closer to this 28,000 area, 29,000 area, the R2. And you'll get like, so then you'll have 1 up here, you'll have 2 on the pullback to this area, which makes sense. And then 3, 4, 5 continuing up through them. So yeah, I mean, overall, again, there's nothing on that screams that we should be falling, that this is the top. It's silly. The idea that we break, that if we break down below 22,500, and all of a sudden that means we have to be bearish, is just nonsense. All that is the first swing. All that is the first support. You're still above the daily pivot in that area of support in that area. So, you know, again, just got to be thinking about it, right? So, 4 hour, look at that crazy 4 hour candle, guys. Look at that. But you definitely want to see an impulse. Right now, long story short, you want to see an impulsive breakout above this swing high right here, which on Coinbase is 23,348 and 73 cents. You want to see an impulsive breakout above that closes above that pivot. And if you see that, that's going to signal, okay, the bottom's probably in, we're heading up higher now. But, you know, right now, this potentially just cleared the way took out these shorts that were sitting right here. See, we had to do it here. You had to do a wicks here. Had to do wicks here. Had to do wicks here. To get through all that, right? Here we come back down. Here we go again with the wicks. Your daily, guys, look at your daily. We're crossing bullishly after bouncing off the bottom of oversold. Again, worst case scenario I see right now is we drop down to the pivot, and then we rally R1, and we drop back down to the pivot, and we break out higher. That is the worst thing I see at the moment right now. All right? Now, if things change over the next few days or weeks or whatever, I'm going to let you guys know. But for right now, there's nothing going on in this area that suggests that would say, oh, yeah, this is a bearish bull trap here, and we're heading down to new lows. There's nothing happening right here or a breakdown right here that says that would be what's going on. It could, but you're not going to get anything. This breakdown here is not going to suggest that that's what's going on. There are too many other levels along the way that you have to break through to do that. And right now, it's on the bull side. The movement up off those lows is on the bull side right now. Okay? The J-Pow jiggle. All right, guys, there you go. Listen, I'm behind here, so I'm going to get out of here. As always, remember, I'm overtime, I guess, but, I did come in a little bit later, so now I guess we're pretty much on time. As always, remember, the only thing you control in the market is how much you lose. So please, 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 no matter what else you're doing, make sure that your risk management, that you're always working on that. It's the most important thing you're going to do day in and day out as a trader, okay? You can zoom out to the larger 4-hour daily time frames, but if you're trading, get away from the weekly. It's stupid. Don't worry about it. You're trading, guys. If you're investing, okay, you can look at the weekly, but then you maybe have to wait longer, but you're going to have to accept that you're going to have to give up profit to get to those larger time frame confirmation areas, like I said, like the weekly pivot, something like that, breaking above there, okay? Keep it in perspective, guys. Remember what level you're at. Remember what time frame you're on. Don't think of a different time frame when you're on a certain time frame. You got to be on that time frame. Okay? All right, guys. Hey, listen, join us. We'd love to have you there at Texas West Capital, right? So come on over to howtotradetowin.com/T3 or /LMT. Check out what we've got there. Feel free to shoot me a message, guys. Christopher.inks@texaswestcapital.com. I'll be glad to answer any questions or anything you have. I can Zoom meeting with you if you want. Or even just a DM if you're on our server. You can get the link there on my Twitter profile and most other places online. But anyway, even if you're not, guys, we'd love to have you there. I think we offer a significant amount of value if you're serious about really wanting to learn how to trade properly. But even if you don't want to take that step, that's okay. Just come on back on Friday, 11 a.m. Central Standard Time. Follow me on Twitter, TX West Capital, Texas West Capital on YouTube, Facebook, Instagram. And we'll see you guys later, all right? You guys have a great week. Trade safe. Take care.